Hi, I'm Chad Gordon at GreenStar Advisors. I'm going to share with you a 60-second story that I think illustrates my strategy that I use to maximize the highest tax-free dollar amount that passes on to your heirs from your IRA, 401k, or 403b plan. During World War II, the Allied forces in England had a difficult predicament on their hand. A disturbing number of Lancaster bombers were coming across the English Channel riddled full of bullet holes. So they asked statistician Abraham Wald to come down and help them figure out where to strategically put on the armor. The planes weren't engineered to armor the entire plane because of the extra weight of it. So Wald looked at the planes, and after looking it all over, his recommendation to the Air Force was to add armor where there weren't bullet holes. And this seems counterintuitive at first, but what Wald realized was that the planes that had the bullet holes in these other areas did manage to survive and fly home safely. So he knew that it wasn't a vital area of the plane. Your IRA is kind of the same thing. No matter what, it's going to get shot full of bullet holes through taxation. But the trick of it is to figure out where you can strategically armor it to protect it so that it does come back safely intact to your family. When people are strong savers and have built up a good balance in their IRAs, what I found that often when people turn 70 and a half, if they had the choice, they would choose not to take their required minimum distribution or RMDs. The reason why is because every year this is just a continual tax burden for them. So let's look at this as a door number one and door number two scenario. And I want you to visualize your IRA not as an account, but looking at it as a pumpkin pie. So the way that RMDs work is that when you turn 70 and a half, the government requires you to take out a piece of pie from your IRA. And before they give you that piece of pie, Uncle Sam takes a bite out of it and you take whatever's left. So this happens every single year. And along the way, if you wanted to, you could take out your whole IRA, and Uncle Sam would just tax the whole thing and take a big bite out of it. And then what happens is if you pass away, your heirs inherit the account, and they have to take that annual slice of pie. Uncle Sam takes a bite out of it. Or again, they could take the whole thing out of it, and Uncle Sam takes an even bigger bite out of it. And so this happens until the funds are depleted out of the account. But no matter what, taxes are in the future of your IRA. Before I go into door number two, I want you to consider what you want the fate of your IRA money to be. So this could be a number of things. So let's say you don't really need the money for your lifetime, and you're most concerned about passing the money on to your heirs in a tax-free way and maximizing how much dollar amount goes to them. So first of all, know that your heirs don't necessarily have to be your kids. It could also be your spouse. Or let's say what you're most interested in is you have a charity in mind and you want to pass it on efficiently with that and take tax advantages of passing an IRA onto a charity. Or let's say what you're interested in is using your IRA to fund into long-term care insurance. You realize you don't really need the money for your long-term expenses personally, but if you go into long-term care, you don't want that to be a big drain on your other assets. So you don't have to decide now on what this is. It's just to kind of get you thinking. Each of these could be a door number two, door number three, door number four option. But let me give you an example. I want to put some real numbers in front of you from a client I worked with about a month ago. So her situation was she had a $500,000 IRA, and she had a daughter. She didn't need the money, and she wanted to pass it on to her daughter, as much money onto her daughter tax-free as possible. Her door number one would have been her daughter would have inherited the $500,000, and if she cashed out the IRA, her daughter would have paid federal and state taxes and ended up with about $300,000 once the taxes were paid. So what we did is we took the IRA and we put it into an annuity that gave her 5 equal payments over a 5-year period of time. So the catch of this is the client has to pay taxes for each of those 5 years. But the idea is that you're getting the taxes over with for the family. And we took what was left after the taxes were paid and funded that into a life insurance that was fully paid after a 5-year period of time. And what that did is that life insurance became a death benefit to the daughter of $1.1 million completely tax-free. The nature of life insurance is that it usually passes on to heirs in a completely tax-free manner. So the wonderful thing about this is that it's a guaranteed dollar amount. It has nothing to do with investment performance or market performance. It just goes directly onto your heirs, tax-free. Again, it all depends on what you're looking for from your IRA. If you're looking to pass the money on to a charity, I'm going to use a slightly different strategy. Or if you have the long-term care concern, to cover expenses for going into long-term care, I'm going to use a different strategy. Or if there's some mix of these things that we can try to kill many birds with one stone, then we'll do that. But at this point, I don't expect you to figure these things out on your own. That's why I'm here, is to help you structure these things. At this point, I just want you to step back and to look at saying, okay, door number one, if you don't do anything, this is the fate of the funds, and to focus on maybe what you'd be most interested in, what you'd like your money to do. If this doesn't make any sense at all, feel free to call me or email me. If it does make sense, the next step is just to run your numbers and see how it comes out. It's not really a big deal. I just run a quote and email it back to you and give you a call and go over what it is. Any information that you're going to provide for me is 100% confidential and private. I don't share it with anyone other than the insurance companies to run you a quote. And so the things that I need are not extremely personal. I need your name, your birth date, your state of residence. I need your gender. I need your phone number so I can call you and go over these things with you. And it'll be me calling you. It's not going to be some telemarketing center or something like that. And then also the balance of your IRA. And if at this point you're not comfortable providing the balance of your IRA, that's perfectly fine. I'm not going to take it personally. Just put in $100,000 so you can get a rough idea of how it comes out. And then we'll go from there if you end up being interested in doing this. And also lastly, I very much welcome working with any accountants or attorneys or whoever advises you of your finances in your life, if it's a sibling or a child or a pastor or a rabbi or a wizard or whoever advises you financially. I'm happy to call them, explain this to them. You're welcome to email this to them and have them take a look at it just to help you come to a decision on what makes the most sense for your situation. Thank you for watching, and I look forward to working with you. And feel free to email me or call me.